Dana Peterson is chief economist at the Conference Board. Nice to see you. Welcome to the Closing Bell.
Thanks for having me.
Biggest job growth in 7 months. Wages up slightly. I've seen some referring to this as a Goldilocks report. Is that how you see it?
Well, certainly it was an astoundingly good report. We had 2 months of near $1 million job gains, roughly 940,000 in both July and June. Big upward revisions in prior months. When we looked at the details, almost every sector saw an increase in jobs, especially leisure and hospitality, where you have in-person services where we would expect people going to amusement parks, going to restaurants. So for the most part, really great jobs data. Regarding wages, we did see wages. They were up almost 6% annualized over the last 4 months. So that's telling us that we're having a really tight labor market and that businesses certainly are having some trouble finding workers and are providing incentives for them to come.
To what degree do your members continue to face wage pressures, as you just referred to, and how long do they think that's going to last?
Well, that's the key. Some of our members are saying, yes, it's really tough to find people, especially lower wage workers, also manual services workers, people who need to work in person. But they're also seeing people quit, certainly at the higher end where people are saying, look, I want to change jobs. I want to try something new, try something different, or maybe I can find a higher wage. And so we're definitely hearing from our members challenges around hiring. In terms of how long they think this is going to last, it's really uncertain. Our thoughts are that in the fall, things will probably improve a bit, certainly as many children are able to physically go back to school, their parents can go back to work. Also, the very generous federal unemployment benefits expire, so you'll have many more people who are willing to go back and look for a job. But still in all, what do you do about the people who are quitting? And quit rates are actually, at the highest level we've seen in a very long time.
Doesn't this put Dana, Fed Chair Powell, in a little bit of a pickle because it's clearly very strong data, would point to tapering the emergency stimulus funds, but at the same time came before we really saw any impact of the Delta variant on the economy, which could threaten at least event cancellations. The New York Auto Show was canceled, and consumer behavior.
Well, certainly the Delta variant does provide, if you will, somewhat of a caveat for the Fed to wait. Certainly, we have seen events being canceled, also new mask regulations coming into place, voluntary people and businesses deciding that they're going to not do things. And so it's about substantial further progress in terms of achieving the labor market objective at the Fed. And the Fed can still poke holes in today's report and say, well, there's still roughly 5 million people who are unemployed. 56% of them are women. Also, labor force participation is still down. And we have this Delta variant that throws a lot of question marks in terms of the outlook. So certainly this gives the Fed a little bit more room to wait.
So what does this do to your forecast? When do you expect the tapering to begin? And what about rate hikes? You looking at that timeline as well?
Well, the thing is that probably sooner than later. I think a big thing that many FOMC participants are becoming uncomfortable with is inflation. Certainly, there are a lot of reasons for why we're seeing inflationary pressure. Some of them are transitory and will go away once supply chains improve, and the dynamics that we see in terms of people solely buying goods and switching over to buying more services, those things are pandemic related and should end. But what about the chip shortages? That's not going to change anytime soon. That's going to put upward pressure on auto prices and anything having to do with tech. Also, when we look at rents and OER, those prices have been depressed throughout the pandemic, and they're probably going to rise. So if you're an FOMC member, you're looking at this and saying, well, there's probably going to be higher inflation, more inflationary pressures, and will this go away sooner rather than later? And certainly if there's a perception that we're going to see very elevated levels of inflation, especially later this year, and we don't get back to something averaging just above 2% sometime next year, the Fed will probably have to begin tapering earlier and certainly raising interest rates faster than what's currently priced in.
Dana Peterson. Dana, thank you very much.